when you talk about gold and relate it to the dollar, the petrodollar deal said we will sell you, we will denominate oil globally in dollars, and for that and recycle any extra proceeds into treasuries, but for that you'll protect us. Okay, great. So now Saudi Arabia has joined BRICS, the BRICS New Development Bank. They've joined the Shanghai Cooperation Organization, which is the largest regional military organization in the world. And if you look at like the performance of the Treasury, for example, over the last 25 years, gold has doubled it with no counterparty risk. It can't be taken from you if you're holding it in your own possession. And so there's no reason to own treasuries. And so what these countries are doing are slowly rolling off. They're not continuing to re-up their treasuries, letting them roll off their balance sheet and replacing it with gold, because gold has doubled its performance and has no counterparty risk and will be part of this new system. And so what you're realizing, and there's some numbers that I did just the other day. I'll read it to you. If you were Saudi Arabia, what would you rather have? Would you rather have would you rather have dollars or gold? And I did this math. Let me see if I still have it. I know I have it somewhere. I did this math where it really blew me away. How much more sense it makes to own gold for your oil instead of US dollars. Let me see if I can find it here real quick. If I can't, I'll skip it, but I think I can. Here it is. Okay. So, and I did that. This is the interesting part. I did this last week with gold at $25.90. And today we have gold at $26.61. So in a week, it's up $70. But I'll do it with $26.61 at $25.90 and oil at $70 a barrel. You get 37 barrels of oil for 1 ounce of gold. Right now, it works up to 38 barrels of oil because in a week it's gone up. So if you're Saudi Arabia, you're thinking, shit, what do I want dollars for that are depreciating by 7% per year through money creation when I can buy gold that's increasing by 9.9% per year since 2000? And you can see that in a week, it's the difference of 1 barrel of oil because gold keeps going up. So in any case, if you realize that for 1 ounce of gold, you get 38 barrels of oil. Imagine you have your wife's purse. See, you're married, and your wife's purse, and maybe she's got an extra strong strap, and it can hold 20 pounds worth of gold, which is 290 ounces of gold. 290 ounces of gold in one woman's purse buys 10,000, well, it was 10,730 barrels of oil. Right now, it's going to be more than that. So if you take 2661 times 290, divide that by $70, 11,024 barrels of oil for as much gold as your wife could hold in her purse. So why the hell would you want US dollars if gold is now the only tier 1 reserve asset? It's going to be pegging a new system. It has no counterparty liability. It cannot be sanctioned. What the hell do you want dollars for? You don't. And what about treasuries? Oh yeah, gold has doubled the performance of the treasury market over the last 25 years, and it cannot be sanctioned. In fact, turned into weapons and given to the country you're in the midst of a war against. Bad decision by the US. So when you talk about where this is ultimately going, it makes zero sense for Saudi Arabia to want to continue to accept dollars and treasuries in a country that has chosen inflation over austerity. We've pivoted again. We've lowered rates again. And the funny thing is they lower rates and what happens? The bond market sells off and rates on the back end of the curve go up because the rest of the world says, really? You really think we're going to continue to hold your duration treasuries when you're just going to inflate your way out of this mess?
Right. Yeah.
So this is a problem that ain't getting better. Gold is the solution by many of these countries.
For decades, the petrodollar system has been the backbone of the US dollar's dominance. The idea was simple. Saudi Arabia and other oil-producing countries agreed to sell oil exclusively in dollars. In exchange, the U.S. offered military protection and a promise that these oil-exporting countries could recycle their surplus dollars into U.S. treasuries, effectively keeping the dollar as the world's reserve currency. This arrangement ensured a continuous demand for dollars and gave the U.S. government a virtually unlimited credit line. But now we're seeing a shift. Saudi Arabia has joined BRICS, a coalition that includes Brazil, Russia, India, China, and South Africa, which aims to challenge the dominance of Western financial institutions. They've also joined the Shanghai Cooperation Organization, SCO, the world's largest regional military alliance. This move signals a major realignment of geopolitical power and a possible end to the petrodollar's reign. To truly grasp the significance of this shift, Let's talk about what Saudi Arabia is doing with its reserves. Historically, the surplus dollars from oil sales were reinvested into U.S. Treasuries, which were seen as the safest investment in the world. However, the reality is starting to sink in that gold has outperformed Treasuries over the last 25 years. As Andy Schectman puts it, gold has doubled the performance of Treasuries, all while having no counterparty risk. What does that mean? Unlike Treasuries, which are essentially loans to the U.S. government, gold is a tangible asset that can't be defaulted on, seized, or manipulated by a central authority. When you own physical gold, especially if it's in your own possession, it's yours. No one can take it from you or use it against you, which is especially important in a world where sanctions and asset freezes are becoming more common. So, if you're Saudi Arabia, what would you rather hold? US dollars that are depreciating at 7% per year due to rampant money printing, or gold, which has been appreciating by 99.9% per year since 2000? When you look at it that way, it becomes crystal clear why many countries are letting their treasuries roll off their balance sheets and are replacing them with gold. And this trend isn't limited to Saudi Arabia. Countries all over the world are doing the same. Andy brings up an interesting calculation regarding the gold-to-oil ratio. He points out that with the current price of gold at $2,661 and oil at $70 a barrel, 1 ounce of gold buys you 38 barrels of oil. Last week, when gold was at $2,590, it bought 37 barrels of oil. In just 1 week, the value of gold relative to oil has increased by 1 extra barrel. Now think about this from Saudi Arabia's perspective. Would you rather receive a currency that's losing value every year? Or would you prefer to hold an asset that appreciates, buys more oil each year, and has no counterparty risk? Let's put it in simpler terms. If your spouse's purse could hold 290 ounces of gold, that would be worth over 11,000 barrels of oil at current prices. In comparison, holding dollars means watching your purchasing power decline, making gold an obvious choice. Moreover, gold has now been reclassified as the only Tier 1 reserve asset besides cash by the Bank of International Settlements, BIS. This means that central banks consider gold to be as safe as cash, but unlike cash, it can't be printed at will. This is a massive shift in perception and highlights why gold is becoming more attractive to nations looking for security and value preservation. The shift away from U.S. Treasuries is not just a Saudi phenomenon. Many nations are beginning to realize that treasuries no longer offer the security they once did. The U.S. has chosen inflation over austerity, continuously expanding the money supply to cover its growing debts. This inflation has consequences. When the Federal Reserve lowers rates, the bond market often reacts by selling off, pushing yields higher on the back end of the curve. Essentially, investors are saying, we don't want to hold your long-term treasuries if you're going to keep printing money and devaluing the currency. This is why gold is becoming the solution for many countries. It provides a hedge against inflation, protects against geopolitical risks, and holds value over time. While the US dollar is backed by trust in the US government, gold is backed by its inherent properties as a finite and universally recognized store of value.
The reason I've been talking about the BRICS issuing a common settlement currency, or even a BRICS currency, which this is not, is that there's a man named Sergei Glaziev, and I've been saying this on thousands of YouTube videos since 2020, because Sergei Glaziev is the Russian finance minister, the minister of economics for the Eurasian Economic Union, and he said this, for years, there will be a common currency that will be backed by a basket of commodities, he said, and a basket of BRICS plus currencies. Been saying this forever, so I've been saying it. Long before anyone else has talked about this publicly, I was screaming about it in 2020. And then there's a meeting in Russia just a few weeks ago, and from it, Dilma Rousseff comes out and makes a couple of comments. Dilma Rousseff is the former president of Brazil. Dilma Rousseff is no small fry. Dilma Rousseff is the head of the BRICS New Development Bank. And she came out and publicly said the following. She said, first of all, 59 countries have formally applied to the BRICS, have expressed interest in joining the BRICS and applying at this new meeting in October in
Kazan. Yeah.
In Kazan. But she said there are two things. She said, I had two meetings, on the sidelines with Sergei Glaziev and Putin. And in principle, we have agreed to a new settlement currency. Remember Enbridge, trade our local currencies, our CBDCs over the Enbridge. And so we have to make sure that we keep our BRICS plus currency ecosystem, our own monetary system, our economic system. We got to take good care of it. We don't have to worry about converting to a US dollar as much. We want to keep our own little ecosystem strong. So she said, in principle, we have agreed to a new settlement currency called the unit. And the unit will be, instead of a basket of currency, and by the way, she said, I had these meetings with Putin and Glaziev. And she said, in principle, we've agreed it will be a basket of 40% gold, not basket of commodities, 40% gold. What is gold? Oh yeah, it's the only other tier one reserve asset as reclassified by who? The Bank of International Settlements. Who is behind what? Enbridge. Do you think there's any coincidence that gold is a tier one asset and all these banks have been buying gold the way that they have, the central banks over the last 2 years, last 2.5 years, the central banks buying more than any time in history? Well, wait till you find out why they're all repatriating it as well. Not as obvious as it seems with the weaponization. Sure, that's part of it. So the unit ecosystem says that the gold and that the currency that is used to mint these tokens will all be thrown into an escrow account within the borders of the countries that possess the gold. In other words, this system that we've been in for 70 years, the West holds the gold. Send us your gold and we'll give you access to our markets. Ain't that way this way. This new program is you hold your own gold. You're going to pull it into an escrow account. You're going to mint your own tokens. But those escrow accounts, well, they're going to be audited independently, continuously to maintain the integrity of the ecosystem. Strict penalties if you deviate from that protocol. In other words, you're not going to need to send your gold to Beijing or to Moscow or to the United Arab Emirates. You're going to keep it yourself.
With the potential launch of the unit currency, backed by 40% gold, we are witnessing the beginning of a fundamental transformation in global finance. The unit is set to be a settlement currency that is designed to replace the US dollar in international trade among BRICS countries and their allies. Unlike the fiat-based petrodollar system, the unit will be partially backed by tangible assets, with gold being a central component. This is a return to the concept of sound money, where value is tied to a physical asset that cannot be manipulated. The decision to back 40% of the unit with gold is a bold statement. It signals to the world that the BRICS countries are not interested in playing the fiat currency game any longer. They want a currency that is not subject to the whims of central banks and that maintains its value over time. And let's be honest, when compared to the dollar, which has lost over 95% of its purchasing power since the Federal Reserve was created, gold has been a much better store of value. The significance of this move cannot be overstated. It's not just about creating a new currency. It's about challenging the entire Western financial order. The petrodollar system gave the US immense power, allowing it to impose economic sanctions, control trade, and finance its own deficits by simply printing more money. The unit aims to provide an alternative to this system, a stable currency that countries can use without having to rely on the dollar or be subject to US sanctions. One of the driving forces behind the shift away from the dollar is the weaponization of the US financial system. Over the past decade, the US has increasingly used its economic power to enforce sanctions on countries that do not align with its interests. This has included freezing assets, blocking transactions, and restricting access to international financial systems like SWIFT. While these actions may have achieved short-term political goals, they have also pushed countries like Russia, China, and even US allies to seek alternatives. Gold, on the other hand, cannot be weaponized in the same way. It is a physical asset, and if you hold it, no one can freeze or confiscate it without physically taking it from you. This is one of the reasons why central banks around the world have been repatriating their gold reserves, bringing them back from Western vaults and storing them domestically. Andy pointed out that countries like Saudi Arabia are choosing gold because it cannot be sanctioned. This is a crucial advantage in today's world, where financial sanctions have become a common tool of foreign policy. By holding gold instead of treasuries, countries can protect themselves from these economic weapons and ensure that their wealth remains secure. The rise of the BRICS and their plans for a new gold-backed currency have coincided with a surge in central bank gold purchases. Over the past 2 years, central banks have been buying more gold than at any time in modern history. This is not a coincidence. These institutions are preparing for a future where the dollar is no longer the undisputed king of global finance. In 2022 alone, central banks added over 1,000 metric tons of gold to their reserves, the highest level of net purchases since 1967. Countries like China, India, and Turkey have been leading the charge. But even Western nations have been quietly adding to their reserves. The reason is simple. They see the writing on the wall. The global financial system is shifting, and gold is going to play a central role in whatever comes next. The Bank for International Settlements, BIS, reclassified gold as a Tier 1 asset, putting it on par with cash in U.S. Treasuries. This move has made gold even more attractive to central banks, as it can now be used to meet reserve requirements just as effectively as cash. This recognition of gold's importance is another sign that the financial elite are preparing for a major change. As we move closer to the launch of the BRICS unit and the continued erosion of the dollar's dominance, investors need to understand what this means for their wealth. The dollar's decline is inevitable, with rising inflation, record high deficits, and a Federal Reserve that seems unable or unwilling to make the tough decisions required to stabilize the economy. The dollar is losing its luster. For individuals, this means that holding dollars or dollar-denominated assets like Treasuries is becoming riskier by the day. Inflation eats away at the purchasing power of cash, and Treasuries offer little in the way of real returns when adjusted for inflation. Gold and silver, on the other hand, have proven their ability to maintain purchasing power over time. But it's not just about protecting wealth from inflation. As Andy mentioned, gold is also a hedge against geopolitical risk and financial instability. In a world where the rules of the game can change overnight, where sanctions can freeze your assets, and governments can print trillions of dollars with the push of a button, gold provides a level of security that no fiat currency can match. The emergence of the BRICS unit, the decline of the dollar, and the resurgence of gold as a core reserve asset are all signs that we are entering a new global economic order. The old system, based on the dominance of the US dollar and the ability of Western powers to control global finance, is coming to an end. In its place, we are seeing the rise of a multipolar world, where power is distributed more evenly, and where countries have alternatives to the dollar. For investors, this means that the strategies that worked in the past may no longer be effective. In the old system, you could park your money in Treasuries, collect a modest yield, and sleep well at night knowing that your wealth was safe. But in the new system, where currencies are devalued and geopolitical risks are rising, that strategy is no longer viable. Gold and silver should be at the core of any strategy designed to protect wealth in this new environment. Not only do they offer protection against inflation, but they also provide a hedge against the decline of the dollar and the instability of the global financial system. And for those looking for even more upside potential, mining stocks offer a leverage play on rising metal prices. As Andy has pointed out, we're at a pivotal moment in history. The pieces are falling into place for a major shift in the global financial system. The BRICS countries are leading the charge, and they are doing so with gold at the center of their plans. Central banks are buying gold, nations are repatriating their reserves, and a new currency backed by gold is on the horizon. In conclusion, the dynamics of the global economy are shifting, and gold is taking on a renewed importance. Whether it's the BRICS nations moving away from the petrodollar, central banks buying record amounts of gold, or the plans for a new gold-backed currency, the message is clear. Gold and silver are the future. This transition is not something that will happen overnight, but the signs are all there. The smart money is already moving into precious metals, and for good reason. The petrodollar system is fading, and in its place, we're seeing the rise of a new system. One where gold, not the dollar, is the ultimate store of value. As we navigate these uncertain times, remember that gold and silver are not just commodities. They are insurance policies against the failure of the financial system. Whether you are an experienced investor or just starting out, now is the time to take action. Add gold and silver to your portfolio and prepare yourself for the changes that are coming. Because one thing is certain, the future will be different, and those who are prepared will be the ones who thrive.